Hi, this is David Marsh again for part two of the live video for the webinar attendees. Back at the NASDAQ, we're focusing on the S&P today. I already did three good videos for you guys that you're going to have access to at the webinar. Like I said, there's a short trade here, another beautiful long trade here. And why am I pointing this out? Because a lot of you have emailed me saying, hey, can we use Pro Indicator for other markets? And the answer is yes, but you need to understand the system before you do. And I know if you watch those videos, you'll see I just used the same chart I trade the ES off of, and just used Pro Indicator and did it on the videos. And I could have done that today. I just didn't. I'm focusing on the S&P. We're still waiting to come out of no zone, and we'll show you that in just a moment. And then we're going to take a no zone trade. But you just see, just using Pro Indicator on its own, on the NASDAQ markets as well as other markets. Now, I've done a lot of NASDAQ. Now, probably later this week or next week, I'll take another market, and you guys can send in suggestions, and I'll pull it up and I'll simply trade live, of course, just off of using Pro Indicator. So let me pause for a moment and go back to the S&P, but I just wanted to show you that first. Okay, we're back on the S&P market. We're still in no zone, and we're waiting to come out of no zone. No zone basically means we avoid normal system entries because the likelihood of them winning has been reduced. When we're in no zone, the NSCs, again, we avoid, but when we leave no zone, the probability of those trades are increased. So what I'm going to do when we come out of no zone is go long or short two contracts, whatever it may be at the time, and I've got a stop loss of 8 ticks on each, but I'm going to move the stop loss to break even after and if price action moves 4 ticks in my direction, take my stop loss to entry. Okay, and my first target's going to have a 4 tick target, and my second target's going to be an 8 tick target. Or I could simply let them both off at 6 ticks. But I do it like this because I also have a long-term indicator, and let's say we were to have a short NSC at an O zone, and I had four, maybe I jumped one off at four, and then it looked like our long-term indicator was going to go short. I could take this contract out even more for maybe 12 ticks profit. So that's why I do it like that too. So I'm just going to pause again, and we will wait to come out of no zone. There were a few good trades that we missed that I could have had. We had a couple of real nice EET trades for one and dones today. I missed them because I wanted to show the Nasdaq, and I want to show you a no zone trade. So let me pause the video, and we'll come back when we come out of no. All right, we're back. We're at a no zone, and we're close to getting an NSE. And at this point, if we do get the NSE, I want to enter my trade about 78 and a quarter limit. Okay, it's moving back down here. It's going to have to move back up a little bit before we catch it. But this is a higher probability setup. Okay, and just because it's a high probability setup doesn't mean it's going to win. It just means it's a higher probability trade. So right now, it's going to be, the entry would be 78 and a quarter maximum. I always enter on limit. I always enter limit at my worst possible fill. I don't go market because I don't want negative slippage. The good thing about this is that I can get, I hope I misstated that. I don't want to get negative slippage. Now, right now, I just got very good slippage. I wanted to go in at 78 and a quarter. That was my worst case fill, right? Well, I got filled a point better. Okay, I was happy at 78 and a quarter. I'm ecstatic about 77 and a quarter because 78 and a quarter, which would have been my entry, is already my first profit. So hopefully this trade will run up. And we're keeping an eye on the long-term indicator. It's already gone long. If it was getting ready to go long, I could try to take a little more profit out of this trade, but it's already happened, so it's no longer uh, a part of this. Okay, but during this cycle right now, because this is a high probability trade, we would be avoiding short trades. So if we were to get an EET short, that would be an avoided EET. Pro Indicator version 2 does not suppress that because it simply doesn't, it knows a lot of the rules, but it doesn't know all of the rules. So you would still get an EET signal. Well, you could, we may if it sets up, but it would not be valid. And of course, I teach that in my course. I teach everything you need to know, what parameters to have on your chart if you don't use Pro Indicator, even if you use Pro Indicator, what trades not to take, etc., etc. So if we get 78 and a quarter, my stop loss is going to automatically move up to even. And again, I could let all my contracts off at a point. Okay, there's the profit on that one. This one should have moved too. I forgot to take it up there on my custom. So we made 1 point on the one, and we could have jumped off on it for both of them, but we're going to take our stop loss to break even. We got a profit on one contract, or you could have done two contracts or three, whatever you do. And we're going to see if we can make a little more on the second contract. Now, again, if the long-term indicator had just went long, then I would try to even go another point higher on this. Okay. And I could also, if I start moving up a couple ticks, I could take my stop loss up a couple ticks, you know, try to lock it in. That's what I'm going to do right now. Take this up a couple ticks, and let's see if we can hit our 2 point target. At least now we've got, 7 ticks in the bank. I don't want to break even on a trade. I would rather try to get the full 8 ticks, but if it comes down and stops us at least we'll make you know, just a half a point on the trade, not quite 2 points, but it's really the discipline here, because a lot of you will say, well, you should have just jumped out there at 79. You could have had 7 ticks, and now it looks like you're probably going to get stopped out, and that may happen. That's part of trading. That's the way trading is. Okay, I wanted to make 2 points on that, and I still may. I may not, but it's all about having a plan and sticking with the plan. If you change it up during the middle of every trade, you're never going to get anywhere in this industry. Okay, so that's what it is. Now, if it does hit 79 and a quarter, I'm going to take this up to a point. So I at least lock in a point, and hopefully we'll get filled at 79 and a quarter. So we'll see if it prints at a quarter. If it does print, I'm going to take my stop loss up to 78 and a quarter. So it moves back down. At least I lock down a point. And again, if the long term was just going long, I would take this up probably 4 more ticks and try to get a little more off of it. So getting a little bit of resistance here at 79. Hopefully she'll bounce back one more time before it turns back around. If it turns back around, we're going to get stopped out with just a small gain on the second portion of the contract. So as I said, I could have just let both of them off at like 6 ticks. It really would have been the same thing. I'm trying to show you how you can try to get more profit if you're trading multiple contracts. This is a really good way of doing it. So let's see if we can bust through 79 one good time and see if we can. Oh, look at that. And there you go. So there's a 2 point winner, no zone NSC. So let's wrap the video up. This is for the webinar attendees for June 24th. And thanks for watching.